What is going on, everyone? My name is Fez, and today I'm going to be teaching you one of my most consistently profitable trading strategies. Now, this strategy has been working during war as well. So there's war going on, but this strategy is printing, bro. Like, I am using different models when necessary, right? I take different trades when a different model is presented to me. But most of the time, it has been this strategy and the volume profile one. But this strategy, guys, I'm going to teach you everything about it. Okay, this is probably going to be a full course about the strategy. I'm going to go into each and everything. I'm not going to miss out on anything, right? This is going to be like full on course. So right now, I'm sitting at like around 7K on one of my testing funded accounts. Okay, I'm testing out different strategies on a funded account for my students, and yeah, I'm already up like 7K, bro. That is crazy. So what you want to do first, guys, is make sure you are trading Nasdaq. Okay, you can trade Nasdaq and Nas 100. It's a CFD, but you can still use it. It's gonna be a different timing, so it's gonna be like 9 a.m. or okay, but for most of my students that are watching, it should be 8 a.m. Okay, so MNQ or NQ, that's the one that you should be trading. Okay, and what you want to do is go onto the hourly time frame and also make sure your time zone is set to New York. Okay. Now, on the 1 hour time frame, there's gonna be one candle that forms, and that candle is gonna print you so much money, bro. It's fucking crazy. Okay. So when the 8 a.m. candle closes, what you want to simply do is mark out the high and the low of that 8 a.m. candle. That is step number one. Now, look to the left side and mark out the 1 hour highs and lows, the most recent high and low on the 1 hour time frame. So on the left side, we have a high, right? And on the left side, we have a low down there. Now, you can also mark out 1 hour fair value gap. So we have a bearish fair value gap here, okay? And we have a low on the hourly, the most recent, okay? And the most recent high. Now, after the 8 a.m. candle closes, right? What you're looking for is for price to either take out the 8 a.m. high or the 8 a.m. low. So if price takes out the 8 a.m. high, that is step number one, okay? That is step one. We are not looking for a trade at the moment. The next step is quite simple. We have swept that 8 a.m. high, so we also need price to either reverse from the hourly fair value gap or take out the swing high, okay? So ideally, I want to see price take out the 1 hour high as well. Now, once you have taken out the most recent high and also the 8 a.m. high, what you want to do is drop down to 1 minute or 2 minute time frame. I usually stick with 1 minute, okay? So once you drop down to 1 minute, what you're looking for is a market structure shift or CIST. So just like this, we're gonna have a market structure shift. We break a low, so we had a higher high, higher low, and then a higher high, and then we have a shift in the structure. That is step number one. Step number two, right? We have a market structure shift. Now, the most important step is that we need price to close back below the 8 a.m. high. So we need price to close below this, okay? That gives us conviction that price is accepting prices lower, right? Oh my God, what am I even saying? I'm saying that it is accepting prices lower, right? So that is all, okay? And then we can take our entry pretty much from the fair value gap or a breakup block. I'm going to give you guys a lot of examples. Don't skip the video because these examples are going to be different and they're going to be different for each scenario, okay? So you're going to take your entry here. You're going to put your stop right above this high, right? And you can ideally go break even at the 50% of the 8 a.m. candle. So just draw it out like this, okay? A partial or a break even at 0.5 is very important. If your entry is, let's say, somewhere around here, then don't go break even, okay? Just hold the price and wait for price to take out the 8 a.m. low. So your target is going to be the 8 a.m. low or 1 to 2 risk to reward ratio to keep things simple, because price is not always going to take out the opposing low. So to recap, we swept the 8 a.m. high, we swept the 1 hour most recent high, we had a market structure shift, we have a close back below the 8 a.m. candle high, and we then take our entry and we go for 1 to 2 or we target the opposing low. And vice versa, guys, if we take out the 8 a.m. low first, I'm expecting price to take out the most recent low as well on the 1 hour time frame. And once we have that, I'm looking for a market structure shift, price closing above the 8 a.m. low that was swept, and then we take our entry and we target 1 to 2 or we target the opposing high. If there is a fair value gap, so let's just go over this real quick. If we have a swing low and we also have an hourly fair value gap down there, and price taps into that fair value gap, and then we get a market structure shift, then it's very unlikely that price will come down and sweep out this low down there. Okay, so we can utilize this hourly fair value gap. So price taps into the hourly fair value gap, we get a market structure shift, close back above the 8 a.m. low that was swept, and then we take our entry from the fair value gap and we go for 1 to 2 or target opposing high. So let me give you guys a lot of examples, and that is going to clear out each and everything. All right, guys, so here is example number 1, and we have the 8 a.m. candle, right? So what we're going to do is mark out the 8 a.m. candle high and the 8 a.m. candle low. Now you can clearly see that we have this hourly fair value gap, right? So I'm going to mark that hourly fair value gap as well. So now what we are expecting is if price goes up and sweeps the 8 a.m. high, we can take shots. But this is the 8 a.m. low. So look to the left side and we have the most recent unswept low over here. So let's go to the 1 minute time frame now. Now we are on the 1 minute time frame. So let's see what happens. Okay, I'm going to give you a little sauce. So if your entry is after 9:30 a.m., it's going to be a A+ setup. It's going to give you a lot of conviction. Okay, this is like a high conviction setup. But if you get a trade setup before 9:30, that is A setup. Okay, so it is a bit low probability setup, but it works. So right here, we swept the 8 a.m. candle high. We are also coming from the hourly fair value gap. And on top of that, we have a market structure shift. And also we are closing below the 8 a.m. high that was swept. Now we have this auto block. So this auto block is very big. So what I would do in this case is take my entry from here and I would put my stop above the 50%, okay, as ICT teaches you. And then we can target the 8 a.m. low. So let's see how this plays out. We tap into the auto block and the full TP was hit. Okay, so let's move on to the next example. All right, guys, here is example number 2. So we have the 8 a.m. candle on the hourly time frame. I'm going to mark out the low and I'm going to mark out the high of this candle. Now, you can clearly see that we are inside a bullish fair value gap. Now, if there wasn't a bullish fair value gap here, I would wait for price to sweep out this low, okay? So let's see what happens. We have the 8 a.m. low and 8 a.m. high. So let's drop down to 1 minute time frame. So if I get a sweep of the 8 a.m. low, I can look for longs because we are already inside the fair value gap. So we sweep that low and we have a market structure shift. Now do note that we are getting a setup before 9:30. So that is a low conviction, low probability setup, but I would still take it, okay? I'm not gonna miss out on these trades. So we can take our entry here, stops below the auto block, and we can target the opposing high, which is also a significant high up there. So that would give you around 1 to 7 RR. So we get a tap and price just goes up and there we go. Now, if you took your entry after 9:30, right, you would wait for a liquidity sweep, displacement, and then entry from this auto block. Now, if you took your entry earlier, there's a very high chance that you got closed at break even if you were targeting the opposing high, or if you went for a sweet 1 to 2, that's what I do with the strategy, you would be out in no time. Okay, so let's move on to the next example. All right, guys, here's the last example. So we have the 8 a.m. candle. So mark out the high and the low. Now look to the left side and we have an hourly fair value gap. And also you can see that we have this small fair value gap down there. So the 8 a.m. low is actually a fair value gap with this candle, right? So let's see what happens. Let's drop down to 1 minute time frame. So price consolidates and that's it. So this is a high probability setup. Why? Because we are getting a setup after 9:30, right? And also we have a lot of confirmations to take our entry. So we have inversion. We also have CIST, right? And pretty much you can see that price just goes up. Now in this case, what I would do is I would take this inversion setup because this looks so clean, guys, okay? And I would put my stop below this low, but I would go for 1 to 2 at least. So what I would do in this case, guys, is I would ideally go break even at the 50% of this range, or I would go break even at the opposing high, and then I would hold till at least 1 to 2 risk to reward. So that is going to be it, guys. Please, please, please don't get demotivated if you take a loss or a two in a row. Like, no matter what strategy you trade, guys, they're going to be losing streaks. You cannot avoid them. There's not a magic formula that's going to have like 100% win rate. The only problem with most of the traders out there is that the only reason why they're still unprofitable is because they are hopping from one strategy to another. And no matter what they do, they keep on experiencing losing streaks. And that is completely normal, okay? No matter what you do, you're gonna experience losing streaks. There's no way to avoid it. No matter how good your strategy is, you're gonna go through it. As long as you stick to your setup, you take 1 or 2 trades max per day, you are gonna be good and making good amount of money. So I'm gonna see you guys in the next one. Take care, goodbye.